Did you know limited company buy-to-let purchases rose by a staggering 165% last year alone? Today, I'm revealing exactly why landlords are flocking to this structure and how you can get in on the action too. Hi, I'm Dan, a buy-to-let mortgage specialist, and in this video, I'm going to go through the pros, cons, and the step-by-step process to secure a limited company mortgage in 2025. So what is a limited company mortgage? A limited company mortgage is designed specifically for property investors who buy properties through a limited company instead of their personal name. This structure can significantly affect your profits, taxes, and liabilities. So what are the advantages of a limited company mortgage? You've got tax efficiency is the first one. Limited companies can still fully offset mortgage interest against rental income, potentially saving thousands in tax. Then you have lower personal liability. This is where your personal assets stay protected because the property is owned by your company, creating a clear legal separation. Also, you have inheritance and succession planning to consider. It's easier to pass properties to family members by transferring company shares rather than individual property titles. Although be careful with this because whilst it's a pro, it is also a con. A lot of lenders aren't a fan of changing company structures halfway through the mortgage term. This is where you would need the assistance of someone like myself to help you before you change the company structure. There are stamp duty advantages if you're a first-time buyer. If you don't already own a property, you can purchase a property in a limited company and then claim your first-time buyer relief further down the line when you purchase a property you wish to live in your personal name. So to be clear, you do not get stamp duty relief when buying your first property in a limited company. As I mentioned, there are downsides you absolutely must consider. There are typically higher interest rates. Mortgages for limited companies typically come with slightly higher interest rates and lender fees. There is also set-up and maintenance costs. Running a company means extra costs like accountancy fees, filing annual accounts and legal paperwork, and stamp duty costs. Transferring properties you already personally own into a limited company can trigger stamp duty and capital gains tax, so careful planning is crucial. Here's how you would secure a limited company mortgage. So step 1, form your limited company, register your business through Companies House. Most landlords choose a special purpose vehicle, also known as an SPV. If you find this difficult, ask your accountant to set it up for you and make sure you choose the correct SIT codes. Step 2, choose your lender. Not all lenders offer limited company mortgages. Work with a mortgage broker experienced in this area to find the best rates and products. And then step 3, gather documentation. Expect to provide company registration details, director identification, bank statements, and proof of income. And then you've got step 4, which is the mortgage application. Your mortgage broker submits the application and the lender conducts affordability checks based on rental income projections. And then the step 5, complete the purchase. Once this is approved, you'll complete legal checks with the solicitor, finalise the contracts, and you'll secure your investment. So why should you consider a limited company mortgage? Well, if you're a high rate taxpayer, aiming to build a sizable portfolio or planning long-term inheritance strategies, this structure could significantly boost your returns. You really need to speak with a qualified tax advisor before jumping in. So are you ready to get started? If so, book a call with me today. I create straight talking videos for UK landlords covering buy-to-let, bridging loans, and smart property finance strategies. If you're serious about growing a portfolio, YouTube's picked out a video for you here. Give that one a watch next. Thanks for watching, and I'll see you next week.